Let's talk about the wave of hiring freezes in the tech industry that continues to grow. This time, it's Coinbase and Tesla. Crypto trading platform Coinbase is set to extend their already in place hiring freeze for the foreseeable future as they continue to try and wait out this volatile market. Now, Coinbase is experiencing two volatile markets, if we can put it that way. It's the crypto volatility, which has become commonplace at this point. But then there's also the equity market volatility that they've got to wade through. And it was last year that they had actually changed up their compensation practices as they had anticipated that more candidates value predictability in their annual compensation. And they had done this especially in response to the number of highly qualified candidates. They're highly competing with a lot of other tech companies out there as well for the same engineering type of talent and developer type of talent. And so that predictability in their annual compensation and knowing that many of the players in the crypto space had actually used some of that crypto on their balance sheets to actually put into compensation in the form of bonuses or even more regularly some of the rewards that they would pay out over time.
Right on. If you are a suffering shareholder in Coinbase, because this has not been a good post-IPO stock, I say good. I think you would look at this decision by Coinbase finally finding religion on costs and say good, because what the hell were you looking at before? Here's a company that's been investing aggressively while their trading volumes in crypto has fallen off a cliff. At some point, as an executive at Coinbase and a board, you have to step up and realize the financial results you're producing don't validate this aggressive hiring you're doing. Now, I'm looking at a good note right now from the folks over at Citi that met with Coinbase's CFO, Alicia Haas, yesterday, and they seem to have come away with this view that they are going to pull back further in expenses. That is good, but again, Citi is not ready to pull the trigger and say, go out and buy this stock aggressively because they're pulling back on costs. But again, and it's not just Coinbase, look at Tesla. Right. I mean, my morning started with an alert on Tesla looking to potentially cut 10% of its 100,000 strong workforce at a time where delay backlogs for their products are strong. You order a Tesla today, you may not get it for a year.
And it's not just the cuts, it's also the hiring freeze that we've seen also talked about among some of the other major technology companies out there right now. And so Tesla, 10,000 employees, that's 10% essentially of their global workforce. And then thinking about where they are actually going to be able to deliver on the vehicles that are in that backlog, that still comes back to the supply chain management that every company we've heard from this overall earnings season has had to address in one form or another, whether that be on the parts or the chips specifically for a company like Tesla or other auto manufacturers with the EV ambitions, or even if that's down to the inventory management that we're going to talk about in a company with Lululemon as well.
And you have to wonder, I'll leave it with this on Tesla. Is Elon Musk seeing weakness in his numbers amongst high-end consumers because of the plunging stock market? Something to watch moving forward.
The mass market was the vehicle that he wanted to get out there with. And so that would be the real weakness, because it's the mass market vehicle and people trading up who are now in an environment of consumers trading down. The number of people and reservations, if they do not add on those special packages to that mass market Model 3, how does that impact the profitability for Tesla going forward?
I'm still a gas car guy.